Hey y'all. So, welcome to the first video in our series. Everything I'm about to show you is how I actually read a chart before I ever think about entering a trade. I'm going to break this all the way down. I'm going to break down what accumulation looks like, what a higher high and a higher low actually are, what a full uptrend sequence looks like, what a full downtrend sequence looks like, and why I draw the trend lines the way I do, how I measure a move, how I use all of that to find my pretty entry. And finally, how I mark all of it up on my own chart so I can read it again instantly later so that before I get into the market, I have a game plan. So I'm going to use one chart for this whole lesson. And I'm going to go to a back trace opportunity. And before you can trade any structure, right? Before highs, lows, trends, entries, any of it, you need to be able to spot the very first thing I look for on every single chart, on every single time frame. And that's accumulation. But here's what's going to make this video different from a basic definition. I'm not going to just show you what accumulation looks like. I'm going to show you how I hunt for it across 5 different time frames, which is the day, the 4 hour, and the 1 hour, and the 15 minute, and the 5 minute, and why finding it on each one tells me something different. So let's start with the basic definition, then we'll build the whole system on top of it. So you may say, well, what is accumulation? I'm glad you asked. Let me share my screen. Right, let's get this screen shared. Okay. And so you're going to see me look to my left here. So let's start with the basic, right? What is accumulation? So accumulation is when price is moving sideways, up and down, back and forth without breaking out into a clear direction. So, like, for example, let's go find a few of them here. So, like here, price is moving up. It can't go that far up. It can't go that far down. This would be considered accumulation. So, anytime you're looking at the market, you're looking for candles to show you that it's here. Let me make this bigger so you guys can see it. There you go. You're looking for candles to show you that price is moving sideways and it's extended as far as it can go up and it extended as far as it can go down, right? And so here's an opportunity of accumulation. Let's find another one. Here's another opportunity where price is just moving. It's like subtle moves. Like it can only go so far. It can only go, so low. And so price can basically get to a point where it's overextended is what I call it, right? And so once you find an accumulation, that is basically what you're looking for and you're trying to figure out like where are we in this price movement? Cuz that's the whole goal of all of this, right? Price can only go so high before it turns back down. Price can only go so low before it turns back up. That's it. That's the core definition, and it's the same on every single time frame. The only thing that changes, right, is how zoomed in or zoomed out you are when you spot it, right? And so, what do I mean by that? So, you can literally click here, zoom in. Obviously, it's like stretched, but it's still going to be accumulation, right? And so whenever I get into the market, that's the first thing that I am going to look for, right? And here's the part most beginners, I believe, skip completely. I don't just look for accumulation once on one chart. I look for it on the day. So I'm going into the day. I'm going to go into the 4 hour. I'm going to go into the 1 hour. And I'm going to go into the 15 minute. I want to see what accumulation looks like on each time frame. Why? Because each one gives me a different piece of the puzzle. The bigger the time frame, the bigger the picture it gives me. And the longer the trade it sets up, right? The smaller the time frame, the more precise it gives me and the shorter the trade it's set up. So let's go through each one. Let's go to the day time frame here. All right. So in the day time frame, I always start here on the day because this is going to tell me the overall objective of how far price has actually been able to stretch day after day, right? So it gives me the endpoints of the current range price has been working within And so, for example, like we're going to just use this as an example, right? This is showing me that price, this is the furthest it's extending up. It's the furthest it's extending down, right? And so why does this matter so much? Because my reference for understanding this, it gives me a reference for targets. And if I know price has only been able to push up to a certain level, and over the last few days, this is where it's been, and it hasn't been able to get any further, that's telling me something important. That's telling me that, hey, this is as far as I should expect whatever move I get into to possibly go to, right? Until something changes. And so, how I typically mark that, let me just remove this. How I typically mark that is I go over here to this side column, which if you push this arrow down here, if you don't see it, it should pop it up, right? I go over here and I grab my horizontal line. So you're going to click over here, go down to horizontal line. I grab my horizontal line to mark the top of that range. So we're just going to do that here, right? And once I mark the top of that range, right, I'm going to mark the bottom of that range. And the color that I like to do is light blue. There's a reason why everything I choose has a color so that when I'm looking at my chart, no matter what time frame I'm in, I'm able to understand what each mark looks like, right? And so I'm going to mark this to the bottom where I consistently see price stacking. Obviously, this wick could count, but that to me is an extension that price tried to push past that, but it couldn't, right? But this is the consistent stack that I see that price can only go this high or this low, right? And so this is typically how I'm going to use it to mark it up. Now, as you can see, you have these two light blue lines so that no matter what time frame I click on, I'm able to see and identify when I'm over here that hey, this is my daytime range, right? This is what that looks like. So I'm immediately understanding and to me I do it this way because I don't want to overcomplicate my chart. I just need two lines that shows me, hey, these are the day ranges that we're in between, just two clean lines. This is the boundary of what price has proven it can do recently, right? Now, once I go into the 4-hour time frame, right? And I look for the same thing, right? If it's the same day range, right? If price is ranging here too and it's the same day, then if it lines up, I leave it. I count it as, all right, this is my 4-hour range. But if I get in a little tighter, right? And I look here and I see that actually the 4-hour has a bit shorter of a range because now I see more consistent candles are stopping at this point. I consider these as just like bleed overs for the day. So I can even go further and go here and say, actually, this is a 4-hour a top out range. And I typically like to do orange for my 4 hours. So I'm going to go in here and then this is kind of solid with the day, but we're just going to mark it because I see here that price is consistently going here. And so it's the same idea as the day, but I do it in orange so that I can immediately tell the two apart just by the color. So if I'm on a 15-minute chart, I can easily say, hey, we may get here and have rejection because, which is what you can see happening here. We may get here and have rejection because price is reaching that 4-hour extension, right? But by the end of the day, it may touch this day range, right? And so the light blue is always my day, the orange is always my 4-hour. I never mix those up, right? And then you want to, once you start creating your colors, you want to go ahead and write that down so that if you have a quick reference, so you can remember what you identified the colors are, right? So that you don't mix it up. Because when I see it, I know exactly what I'm looking at. So if I go over here on the 5-minute, right, I'm able to immediately know, hey, this trade is getting at the bottom of this range. So either this could be the moment it's going to break out, or this is now an opportunity for me to enter or buy because price has shown me it has not been able to go past this point. So it's possible that this buy may be an opportunity from here to there, right? So as you can see instantly, this is why it's important to have those range. So Then let's go to the 15-minute. I'm sorry, let's go to the 1 hour. So once I get into the 1 hour time frame, right? And the 15-minute and the 5 minutes, I switch how I start marketing. How I start marking. Instead of using horizontal lines, I start to use boxes. Why? Because I don't want to overcomplicate my chart, right? And so why I switch, because on the lower time frames, accumulation can form in a complete much faster way. It can happen at any moment. And that box is going to capture that contained pocket because it may just be that particular moment. And it's going to it's going to give me a better visual than trying to do lines. Because at that point, it's like multiple lines on your chart and it can get a little confusing. So to be clear, on the full system of how I look at this, the day is the light blue horizontal lines, the 4 hour is the orange horizontal lines, and the 1 hour, the 15-minute, and the 5 minutes are typically going to be a box or whichever, on those time frames I spotted on first. So how the time frame tells you how long to hold, right? Here's why finding accumulation on the right time frame matters beyond just marking a chart. It tells you basically how long a trade coming out of that range is likely to play out. And so, for example, right? Like if I was to see here, we're kind of on a breakout here of this 1 hour candle, right? So I initially marked this as accumulation, right? And I did that based on this 15 minutes here, right? Price was kind of stopping here, getting here, and kind of ranging. And if I go on the 5 minutes, I was able to see a little bit more of that accumulation. And again, accumulation is finding where price can only go this far, it can only go this low. And so I started to see that here on the 5 minute, right? And the beautiful thing about marking your box is that once you mark it on your 5 minute or your 1 hour, your 15-minute, wherever you see it, it should translate in the other time frame so that you can even identify it more. But what are we doing? We are teetering our 4 hour line here, right? And so when I say how you enter will determine how long you hold, because if you're entering on a day accumulation, so let's say price gets all the way to this point, or you're watching this 15-minute breakout, you're going to get in that trade, but you're not going to expect that it's going to do this big long wave. You're going to be a little bit more mindful. Now, could it break out of that day? It could, but you now have a theory to say, I can at least get a nice trade from here to this point because our day has shown us that this has been our extension. Now, if price gets there and keep pushing, that's cool, right? You're able to secure more profits. But if price gets there and it's rejecting, it's rejecting, it's rejecting, and meaning this is where those lower time frames come. If we go on the 1 minute and we see prices stacking and stacking and stacking at that point, then we know, hey, we're at the tail end of that. So then you're able to gauge how you're holding these trades, right? And so if you do enter a trade on a day, right? Let's say price happens to get all the way to this point, that could be a trade you're holding for a few days because obviously that accumulation range is saying, hey, this is what's happening over the course of a few days. Or if you're entering on a 4 hour accumulation, that's a trade you could be holding for a few hours. If you're entering off a 1 hour accumulation, that's usually a trade you're holding for maybe one or two candles on that time frame. And if you're entering off a 15-minute accumulation, that's definitely a shorter hold depending on the steam that trade has. And it could be measured in a smaller stretch of time. So if you're entering off a 5 minute accumulation, that's your shortest, quickest, that's more of your snipes. That's where you kind of find those quick opportunities. So before you even think about your strategy, use the time frame of your accumulation, right? Whatever that is sitting on as your gauge for how long this trade is realistically going to play out, right? That's going to set your whole mindset for the trade before you're even in it, right? And we haven't even got to understanding. This is just simply off of understanding our levels, right? And so obviously the bigger the time frame, the stronger the trade is going to be, right? But I still like to look for the smaller ones because sometimes price may take a while to get to those other points, you know? One more honest something to note here, generally speaking, the bigger the time frame, the stronger the trade. A day or a 4-hour accumulation carries definitely more weight than a 5 minute, a one, or a 1 minute, just because more time and more participants went into building that range. I personally like finding accumulation on the 15-minute just as much. It's not about only trading the biggest time frame. It's about knowing what kind of trade you're setting up, which depending on which time frame you find it on and choosing what fits how you actually want to trade that day, right? Like maybe you have a little bit of time and you're like, you know what? I can catch this 4-hour trade, or hey, like I only got a few hours, or I only got an hour. Like basically, where you're building on your trade, it's good to build from the day, the 4, the 1, the 15-minute and the 5, and then decide from there how you're going to collectively decide, hey, this is all the data I have for the day. This is how I'm going to base my decision of my trades. And honestly, this is so important before you enter, because here's the actual point of this entire video, and this is the part I want you to hold on to more than anything else. Before you get into the market, you need to understand where price is ranging. You need to understand where price is going, right? And if you don't understand where price is ranging, you are setting yourself up for failure, because here's exactly what that looks like when it goes wrong. Let's say price is sitting at, let's go to our day here, right? Let's say, hold on, my screen is kind of freezing here. Hold on. Let's give it time to catch up. Okay, let's go to this day here, right? Mhm. So let's say price is sitting at the bottom right now of this range that we marked, right? In light blue. And you think, oh, this looks great. This is a great opportunity to sell, right? And let's say you're looking at that on the 1 hour and you're thinking, like, let's just say this blue line, nothing was there. And you're like, ooh, price is on a downtrend. It's going to sell, right? And if you don't realize that, wait, this level is basically reaching the far as price has been able to extend recently. So if you don't have that context to know that this might not be that fresh opportunity, like you actually are super close to, hey, this trade is at the end. It might be at the edge of that range. And if price doesn't push above, I'm sorry, below that level, that's exactly when you should be thinking about securing your profit, right? If you did try to say, "Hey, I'm gonna get in on a sell here," but if you didn't mark up your ranges, you don't know that, hey, that sell is gonna be very short lived. And honestly, to me, that at that point, it's like I don't think that you'll be able to time that, correctly. So you should be thinking about securing your profit if you decided to get in, or let's say you were up here and you were like, oh, this price is selling. And let's say you started your trade up here and you're going and you get here and you're like, oh, I'm gonna keep holding. But if you don't know that, actually no, because you're at the end of that day range. So you need to kind of have a plan here. Are you gonna secure your profits? Are you gonna partial close? You need to go watch this on the 1 minute. Go make sure price isn't doing exactly what I was just about to say. It's not stacking, saying, hey, we've reached the end of this, right? Because here's a 1 minute accumulation. Price is showing us price can't go below here, right? And it's just pushed up past where it wasn't being able to go, And so that's the entire value of marking up your levels and marking up your zones before you trade. They're not just decoration to make your chart look pretty, make you feel important. No, it's telling you directly where the market has already shown it can only go here, it can only go there. And that's going to shape everything about how you manage your trade once you're in it. If you understand all these zones, you have a better opportunity to win. And so I don't want to go deep on exactly how to enter off of accumulation, because that's going to come in a later video in this series, not this one. Right now, the entire focus of this video is just, so that you can understand, hey, what is accumulation? Let's go back here, right? Hold on. There we go. Let's find it. What is accumulation, right? And the ranges of how that works, and how understanding across each time frame it matters. That's the foundation everything is going to get built on top of. And so let's kind of recap all of this. Accumulation is price moving sideways, right? And this is where the highs are capped, the lows are capped. There's no clear direction, right? And then you're going to look for these zones. You're going to look for these ranges on all 5 time frames. You're going to look on the day. What's been happening every day? On the 4 hour, what is the inner working layers of that day? 1 hour, the 15 minute, and the 5 minute, because each one is going to tell you something different about how big, how long, that your trades may be. And understanding that you are in a 1 hour range, but then you have a 15-minute breakout from accumulation, that, hey, it may get capped at this 1 hour, So the more you understand what's happening at every level, the better your entry point can be. And the entire point of doing this before you trade is simple. The more you understand where price has already proven it can go or it can't go, instead of trying to figure it out or find it out the hard way mid trade, you figuring it out, you're able to know this in advance. And in the next video, we're going to build on this and break down higher lows, higher highs, so that once accumulation breaks, you know exactly how to read what happens next. Let's keep building.